Brainmore Business Hub channel. My name is Molen Mpuze, the Managing Director of Brainmore Chartered Accountants. As your accountability partners, as we always living up to our promise, we always bring into the studio subject expert matters. Today in this studio, we are glad that we are joined by Farai Mutsekwa. Farai is a wealth manager. Talking about money, hey, big stuff, big investment. Farai, welcome to Brainmore Business Hub studio.
Thank you very much, and thank you for having me.
Yeah, thank you very much. It's actually our pleasure to have you around. Just before we dig deep into today's discussion, Farai, who is Farai and what do you do around wealth management? Can you just reintroduce yourself to our viewers?
Okay, sure. So my background is accounting, much like you.
Yeah.
Auditing, tax, financial statements, and
Yes.
all that. But several years ago, I branched into wealth management.
Yes.
So basically what I do, my elevator pitch, if I was to meet you in an elevator
Yes.
and you ask me what do you do,
Yes.
I would say that my job is to help middle
Yeah.
and high net worth clients
Yes.
protect and grow their wealth
Wow.
locally and
Yeah.
offshore.
Ah, okay.
Yes.
So which means you're looking at the wealth management for middle to high net worth individuals.
Exactly, but
Yeah.
that doesn't mean that I don't help or assist
Okay.
people who are not yet
Yeah.
or who don't consider themselves
Yeah,
in that
okay.
bracket as
Because it's
yet.
a definition. Yeah.
Another title for what I do is maybe financial planner, financial advisor. as
Okay.
well.
All right.
So we basically cover and encompass the whole aspects of financial planning.
Okay, all right. Well, okay. That's interesting, Farai. Farai, there's this thing around investment versus saving. What is the difference between investing and saving?
Yeah, so it's a good question because
Yeah.
a lot of people are not aware of the differences.
Yes.
So basically saving is what you'd call a short-term exercise. It's
Okay.
when you put money aside either in the bank
Yes.
or even under your pillow,
Yeah.
under the mattress.
Yes.
And the purpose of that is for short-term emergencies
Okay.
or even to buy household groceries.
Okay.
But the time frame or the view is always short-term.
Oh.
Whereas
okay.
investments is when you buy an asset
Okay.
for the purpose of growing your wealth
Yeah.
or building your wealth. And that asset can be in the form of shares, it can be property, it can be bonds, it can be commodities,
Okay.
anything that you'd classify as an asset, which
Okay.
has the objective of creating wealth for you in the
Well,
future.
okay. So what starts? I'm just thinking. I know people have kind of mastered the thing of saving for emergence. Some, not
Yes.
necessarily all, because we
Yes.
find out that, let's say, in different communities, when someone dies, people are starting to look out for contribution and stuff like that, which means the savings has not been
Yes.
mastered well. So I'm just thinking, at what point do you start now saying I need to invest?
Well, ideally, I would say the moment you start working or
Yes.
start earning an income,
Yeah.
you need to start investing. A lot of people
Yeah.
think that you need to have a lot of money or you need to be a millionaire or a billionaire to actually invest money.
Yes.
But you find that everybody started somewhere.
Okay.
So investing really can just be simply putting away, let's say, 1,000 rand a month, 200
Okay.
rand a month,
Oh.
500 rand a month
Okay.
in the bank account in order
Yeah.
to earn interest.
Yes.
So you put it on a medium to long-term notice period
Okay.
in order to earn interest.
Okay.
And you can start there. And as you grow, you can start looking at things like investing on the stock market,
Yeah.
investing in shares. But obviously, these are all things that need a little bit of research.
Okay.
That firstly,
Okay.
some people, either maybe they're afraid of the research,
Yeah.
or maybe they think they're afraid of the risk that they
Yes.
suppose it
Yeah,
entails
yeah.
to invest.
Yeah.
They don't get involved in that.
Yeah.
But however, if you really want to get rich, you'll never get rich from saving.
Wow.
You'll get rich from investing.
Wow.
And the wealthiest people in the world all have some sort of investments, whether it's shares, it's property, bonds, commodities, whatever it is.
Yeah.
It's through investments.
Okay. So I mean, you have just dispelled the myth that I'll start investing when I have billions in my account. Then I start to
Exactly.
think, how do I utilize these funds to grow my
Exactly.
wealth? But you are saying wealth management and wealth and investing starts the minute you are earning something. Think through long term.
Exactly.
How would that funds or whatever you have is going to bring value for wealth in your life in future?
Exactly. And
Wow.
to give you an example, let's say you earn 10,000 rand a month.
Yes.
There's a classic model that says of that 10,000 rand,
Yeah.
70% should go to your day-to-day expenses.
Yes.
10% should go to savings.
Yes.
10% should go to investing.
Wow.
And 10% should go to some sort of emergency fund.
Yeah.
Or something that you want to put away.
Yeah.
And that is one school of thought.
Okay.
And if you and the best way to always start is when you're young, when you started working, when you started your business. If you start religiously doing that,
yes,
I believe that even as you accumulate more money, as you accumulate more wealth, it becomes easier and easier to do so.
Yeah. Hey, you know, when you put that into maths, I'm like, why is that subject not really readily available or known to people then? Investment, because I think is it because it's a longer term future goal and we don't really think into future? As a wealth manager, what have you seen? Why is that subject not really practiced to that extent?
Yeah, I think it all goes back, number one, to our education system.
Yeah.
I think, you know, there is value in learning about, you know, the Roman wars in the 12th century and things like that. But I think sometimes real life practical education is very important.
Yes.
And, you know, many times I say it should start in the home.
Okay.
You know, parents should teach their kids. For instance, if you look at the Jewish culture, they're one of the most successful, wealthiest cultures in the world.
Yeah.
And that is because one of the conversations around the dinner table oftentimes is about money, it's about wealth, it's about business.
Yes.
So by the time someone grows up, they've already acquired this knowledge about how they can basically start investing and build wealth for themselves.
Yeah, to me, I actually think to our viewers, this is a discipline that you need to develop in yourself as a business and as individual to create wealth. Because you see that many people maybe we would have had an opportunity of having created wealth, but we didn't utilize that because of that knowledge. I wish I was a minister of education of some sort. I was going to enforce that as a subject because I think it's a culture that really is needed within our society.
Yes.
Yeah. Let's talk about the types of investments. Farai, what are the types of investments that as a business or as individual you can dig into and start thinking around? Yeah.
So the first thing you need to understand is the different types of asset classes.
Yeah.
Because remember, when you invest, you're buying an asset.
Okay.
So you need to understand what are the different types of assets that are available for purchase out there.
Yes.
So when you're looking at asset classes, looking at things like shares, you're looking at property, you're looking at bonds, you're looking at commodities, and similar types of assets.
Okay.
So those are the types of asset classes that you can invest in. And usually when you're starting, the best way to start is, I always say, just put money in a bank.
Okay.
And earn interest.
Okay.
And enjoy what's called the magic of compound interest.
Okay.
In fact, Warren Buffett, probably the most successful investor in the world, one of the richest men in the world, talks about the magic of compound investing.
Yes.
And really what it is if you put, say, 1,000 rand in the bank.
Yes.
After a year, let's say you earn 5% on it. You're gonna have some money on it.
Yeah.
But after year 2, you're gonna earn interest on the capital.
Yes.
Plus the interest that you earned the previous year.
Yeah.
So basically, what happens is your interest is starting to compound.
Yes.
And if you had to draw a curve, you'd find that that's how you actually grow your wealth exponentially.
Okay. Okay.
For instance, Warren Buffett is still staying in the same house he bought in the 1950s.
Is it?
Yes, and the reason is every time he wants to make a purchase decision, he thinks, now, is this money better used in buying a house?
Yeah.
Or could I put it somewhere and earn compound interest?
Hey,
or invest it somewhere and get exponential growth?
Wow.
And I think he's disciplined himself to that extent that for him, it's not about buying the latest assets. It's always about what return am I going to get out of this investment?
Oh, wow. So I think when you talk about putting money in the bank, you are addressing maybe the people that want to start investing, right?
Yes.
What about others? What forms you spoke about shares? Can you a little bit touch on the different investments, like the shares and the property around that for someone who is already in the habit of or who have some kind of money lying around? Because we do have clients that we can see maybe in their bank accounts they're sitting 500,000. So have you heard that it's not earning anything? What are the type of investment for those?
Yeah, so basically with the share, you see the whole thing about the stock market is when you're investing, a critical thing to understand is about inflation.
Yes.
So inflation is all about the purchasing power of your money.
Yes.
Currently the inflation rate in South Africa is about 6.9%, I believe. So any return you get lower than 6.9% means you're actually losing money in real terms.
Okay.
So the whole objective is to earn a return above inflation.
Yes.
In this case, South Africa right now, your target would be 7% and above.
Okay.
And historically, you find that the stock market is actually one of the best places to invest money over the long term. And historically, the stock market, even in South Africa and globally, has always outperformed inflation. So if you're thinking about where to put money, the stock market is a great place.
Okay.
Yeah. So in terms of education, I'd advise you that, firstly, you do it with a financial planner, financial advisor.
Yeah.
While you're learning and gaining the education, getting to understand how it works, how to select stocks, which are the best stocks, and how to analyze the market. And then as time goes on, you can, if you believe you've gained enough confidence and education, you can actually start doing it yourself.
Yeah.
Through stock brokers and other platforms like that.
Okay. Yeah, you actually have reminded me, Farai, at some point when you were trying to educate me personally in investing for our business, for our company, and for myself. I'm like, Farai, after here, I'm like, how did it perform? So, which means the concept of long-term investment was not yet embedded in there. You're looking into the future around there. So you spoke about shares, stock market. So do you want to talk maybe about property as a form of investment or something like that?
Yeah, property is another really good type of investment.
Yeah.
Reason being, you can leverage off the banks.
Okay.
So in other words, if you want to purchase a property worth 1 million rand, you don't necessarily need to have 1 million rand in your pocket.
Okay.
Depending on the level of your income and your banking profile, your credit history, you can approach a bank. The bank can give you anything between 0% or 100% mortgage bond, or depending on, as I said, your credit risk or your credit profile, maybe they'll say we'll give you 70% or 80%. And based on that, you can actually own an asset worth 1 million rand without even having put a cent or 1 rand. And the nice thing about that is when the property appreciates, that whole appreciation value is yours. You don't share it with the bank.
Yes.
All the bank wants is the original capital back.
Okay.
But if the property is worth 1.5 million after 5 years, guess what? That 500,000 is yours.
It's yours.
And maybe you didn't put a single cent.
Yeah.
So you actually get capital appreciation.
Okay.
Which is one of the great things about property.
Okay, so you have just highlighted the different types of investments and for different people, for different organizations. Yes. So I'm just thinking, what is the value of maybe diversification in different types of investments as a business or as an individual to create wealth? So because I'm just thinking, let's say, for example, we are accountants, we do auditing, tax, and all those kind of things, but you are also talking to people like us to say, hey, create wealth and continue diversifying. What is the importance of that?
So the whole principle of diversification has to do with risk management.
Yeah.
As with anything, there's what's called concentration risk.
Okay.
If you focus on just one thing, yes, it can be great, but if that thing fails, then it means you don't have other options.
Yeah.
So diversification is basically saying you're not putting all your eggs in one basket.
Yes.
And in an investment perspective, the way you look at it is, number one, from a currency perspective, you look at your assets and you say, what currency are my assets invested in?
Okay.
Because there's what's called currency risk.
Okay.
And exchange rate risk.
Okay.
So, for instance, a classic example is Zimbabwe.
Yeah.
We know what happened with hyperinflation. People woke up one day, their pension funds were depleted, their bank accounts were gone, and all because they were invested in the Zimbabwean dollar.
Okay, the currency.
And in the same way, the same could happen in South Africa.
Yeah.
The same could happen anywhere.
Yeah.
So it's important to, number one, consider the currency invested in, and number two, the geographic location of your assets.
Okay.
And again, you don't have all your assets in one place.
Okay.
So I normally recommend to my clients and say, listen, look at something like 25 to 30% of your assets offshore.
Oh, okay.
Yes, you live here, your expenses are here, so you want to earn income in local currency. But you need to think about diversification, the aspect of, okay, if the economy goes down, if inflation goes up, if the currency depreciates, what's going to happen to the real value of my assets? Especially, and this applies to people, especially if, for instance, you've got children and you're looking to send them to university overseas. It makes sense to have some kind of investments in hard currency offshore, so that when you need to pay those school fees and university fees, you know, you're not worried about the exchange rate, the rand to the dollar or the rand to the euro and things like that. And it also makes sense, for instance, for people who want to retire overseas. Maybe, like many people, you dream of retiring on a tropical island somewhere, lying on the beach and sipping blue and red juice and things like that. So again, it makes sense to have, you know, some of your investments offshore, you know, in a diversified portfolio.
So I think you have touched on a very important aspect, because I think the reason why then, in the context of Zimbabwe, then the people that were rich then, and in a minute you find yourself no longer having whatever you have acquired. The concept of diversification was not necessarily there or implemented by that particular individual. If you find yourself in that, which is very important to say, okay, the geographical location, like what we are saying, the currency that you are investing in. I think you have said quite a mouthful. And to our viewers, I think when you're sitting now, you are thinking, okay, how best can I enlarge or expand on your wealth in terms of location? You're talking about offshore. You know, diversifying in different maybe equities or whatever the case might be. You need, I don't know your language, you know, into detail. But what I know is you need to be able to think around, if something happened where I am today, do I have something to supplement my wealth? Is my wealth continuous to grow and not being affected with what's happening currently?
Exactly.
Just to wrap up, Farai, what do you have to say to those two different people? One that hasn't yet even started to invest, maybe saying I don't have enough to do investment, which is, I'm saying that's the larger portion of people. Someone will say, no, I have a saving for something else. But in terms of thinking long term, I'm telling you, the greater portion of people, both individuals, and I operate in a small to medium industry. In the financial statement, I'm not seeing investments. Right? Because it should be it should be a line item there. And I'm seeing sometimes money lying in the bank account as cash and as what is a cash and cash equivalent or balance in the bank. And you spoke about, very important, about the risk that we found in Zimbabwe. During the night, the 100 rand is now worth 10 rand. Can you believe that? So what do you have to say to those people? And also, which means the people that are not yet even thinking about investing. Then to the people now or the companies that have already started, what is the message there to try to make them earn their wealth? Maybe you can touch around, how do you see that your investment are the right investment in terms of growth or something like that? Any message?
So to those who are, let's call them up and coming.
Up and coming. I think it gives a hope there.
Exactly. So to those individuals and those businesses, I would say the key thing is it's all about having a goal. And having a vision. So the first thing is set a goal for yourself. How much, some of the typical questions I'd ask a client is, how much money are you looking to earn, say, over the next 5 years? Or over the next 10 years? What do you want your net worth to be over the next 5 to 10 years? And then I even ask even longer term questions like, where would you like to retire? What kind of lifestyle do you want when you retire? Because all those things determine the actions you take today in order to reach there. So start with a goal. Set your goal. And then be disciplined. Like I said, use that 70-10-10-10 as a guideline. So, utilize only 70% of your income. I know times are tough. People might say, I'm just barely making ends meet. How am I going to put away 10%? But you have to start somewhere. Be disciplined. Even if you can't do 70%, maybe say, listen, let me try and push 90%. At least 10% of my income. Let me start by putting it into a savings account. And I would say if you're starting to save, consider the tax-free savings account.
Okay.
Because at least you're not going to be taxed on it. So the key is just start somewhere.
Yes.
And because you see, the thing about wealth is it accumulates.
Yes.
There are very few overnight sensations.
Yes.
Those one-night wonders.
Yeah.
Those people just make it overnight.
Yeah.
It's a day-by-day discipline that you need to apply in order to reach your goal.
Yeah.
So my key is set a goal.
Yes.
Start somewhere.
Yeah.
And just keep going.
Okay.
Yeah.
Wow.
So that's for those up and coming.
Yeah.
And then for those who are established, I would say, remember when I was introducing myself, I said protect and grow your wealth.
Yes.
So the first thing is what you've built so far, make sure it's protected.
Yes.
Because you don't want to go backwards. What you want to do now is use that as a foundation to move forward.
Yes.
So where you are now, make sure it's protected.
Yeah.
Whether it's through insurance policies, whether it's through property investments or real estate or some kind of collateral investments, make sure it's protected. Once it's protected, again, set a goal of where you want to go, how you want to grow.
Yeah.
And then I would say engage the services of I always say this to people, how everyone has got a hairdresser, a barber, everyone's got a dentist and a doctor.
Yeah.
Every single person should have a financial advisor.
Wow.
Because you see, and the nice thing about financial advisors is they don't charge you up front for their service.
Yes.
The way they make the money is through whatever products you've invested in and whatever service that you've taken. But otherwise, it's pretty much a free service up front. So engage the service of a financial advisor.
Yeah.
And they will help you, guide you through the next stages of your growth.
Yeah.
So even as you grow, you're established, seriously consider diversifying.
Yes.
Even offshore.
Yeah.
There's ways of doing it that are just as safe as investing in South Africa.
Yeah.
And you do it in tax neutral jurisdictions so that you don't suffer from double taxation and things like that. And again, that's where you need the services of a financial advisor, wealth manager who can guide you through that.
Okay. Wow. Yes. Wow. I think we have dealt with the subject. I know we haven't done justice because of time. We're gonna invite maybe in the time to come as well to dig deep into maybe one type of investment and dig deep and explain those type of investments as well. Because I know for certain, because I've been in the industry, I look at maybe 50, 60, worth of books, right? Of people, and I'm not seeing, and even individual tax, when you're doing tax returns, you say, do you have an investment? There is none. So this subject is very crucial, and like what we are saying, Farai, is an intentional decision that you need to make as a business, as an individual, to say, I'm going to start with this, and you have started it already. It's a step further to say, okay, what is my growth goal for my business and my company as an individual? And it's a very critical topic. And how I just wish that whoever, our viewers, whoever is watching this, can put that into practice. And if you need help, we do have expertise around in the house as your accountability partner. Farai, you run your business as a financial wealth manager and all those kind of, and the details, we're going to share them as well in this video as well. So to our viewers, start practicing that as your accountability partners. To our clients, we're going to hear us saying, hey, where's the investment line item? Yeah. And if not, we're just going to send you this video, so that you can put that in practice for the growth of your wealth, and also for diversification into future, because the world is changing. Yes. If you did like the content that you've just watched in this video, why don't you click the like button, subscribe, or even the share. Don't forget to hit the notification button so that you don't miss out on all premium content that we are going to share on this platform. Thank you, Farai, for coming. Thank you for everything and for sharing with our viewers this important topic.
It's a pleasure. Thank you for having me.
Thank you.